So, would any of these technologies or the infrastructure that's going to be put into place or already in place is using any form of oil and gas? Because there's going to be some consumption as well, right? Or no?
As far as any direct infrastructure right now, I know that a lot of the infrastructure that we are building has to do a lot with natural gas.
Mhm.
And also they are working on ways to get to store the energy from solar and wind. And that's a real big, that's a trillion with a T dollar question on how are we going to store this energy from wind and solar so that it is able to use it during a backup time. For an example, as the day we record here in North Texas, we had some horrific storms. So that means wind and solar were probably not our primary source of energy. And it was
Mhm.
probably more likely nuclear and natural gas. So as we move forward over the next 10 years, we'll definitely see infrastructure build more strongly for natural gas and hopefully for wind and solar as well.
This is the Real Estate Vibe Show, and I'm your host, Vinki Loomba. As a real estate investor and a fund manager, I'm always excited to explore the world of real estate opportunities with you and for you. Today, I have a very good friend, Rey Trevino, with me. Welcome, Ray, to the Real Estate Vibe Show.
Oh my goodness, Vinky, thank you so much for having me. You and your team are just, as I always say, y'all are rocking and rolling and blazing a trail. So thank you so much for having me on the show today.
Thank you so much. A little bit about Ray. Ray is a second generation oil industry professional with over 50 years of combined experience in his family. He earned his undergraduate degree from the University of North Texas and is currently pursuing an MBA in energy at Texas Christian University. Ray has extensive experience, having overseen the drilling, testing, and completion of over 100 wells. He and his family manage a family office in Fort Worth, Texas, overseeing oil gas wells across the Southwest United States. Their motto is, "We produce oil, not just drill oil wells." I like that. Okay, we're going to talk about investing in oil and gas today. So investing in energy sector, particularly in oil and gas, provides opportunities for substantial cash flow through production and infrastructure revenues. Additionally, investors can benefit from significant tax reductions, reducing taxable income and enhancing overall returns. By strategically managing these investments, investors can leverage both financial and tax advantages. With that being said, I wanted to mention today our topic is maximizing cash flow and tax benefits from oil and gas investments. So, Ray, let's get started a little bit about the current state of the economy. Can you provide us an overview of the current state of oil and gas industry and its importance in the global economy?
Yes, Vicky, first of all, thank you for that introduction. That was the check is in the mail, as they would say. Thank you so much for the kind words and also all about the good things about investing in oil and gas. Yes, right now, the state of the oil and gas industry or the energy sector as a whole, I would say on a global scale is strong. Right now, what we're seeing is the United States right now really fighting against all of the OPEC countries as far as production goes. I'm sure you're aware that right now we are actually producing more oil in America than we ever have. Every month we have a new record high. And the reason why is because we are just able to really fight the high price that we would have otherwise. About 6 or 8 months ago, OPEC did another million barrel of oil a day cut. And their plan was to raise gas prices even more, or oil prices, I should say, when they did the cut. However, with us continuing to produce what we have produced here in America, we've been able to keep that price anywhere between $75 and $85 oil over the last 6 months. Because, in any other time, if this was 10 or 15 years ago, we've had all these wars break out, whether it's Ukraine and Russia or Israel and I guess all everything going on over there. Um, that we should see on average a $10 to $15 price increase. So we should be already close to a $100 barrel oil. However, with us again producing as much oil as we are, we've actually been able to keep the price low. And in fact, Vinky, that $75 oil price is actually just the sweet spot. It's what keeps America on the roads, and it's what keeps oil and gas companies producing and drilling new oil wells. No, here in America, we're not producing drilling, as many wells as we should right now. However, at some point, we will begin to see new drill take over because at some point also we will have to replace everything that we're producing right now, Binky.
Mm-hmm. And you mentioned that we are producing more oil in the US. We are drilling more oil in the US. So I'm just wondering, with all this new technology advancement, with the hydraulic fracking, they call it, or fracturing, they call it, right? And also the deep water drilling is uncovering so much more resources, the oil resources. So isn't that like same adds to the supply? There's more supply and the demand might be going a little bit lower because there's something called renewable energy these days that's playing a big role as well. So what are your thoughts on that? What it looks like? You say the barrel price is pretty kind of sturdy, staying strong. And with this more supply and overall change in all the economics or dynamics in the oil industry, would that stay long?
Great question. Again, we are producing more oil than we have here in America than we ever have, as I just mentioned. However, we are down over 100 rigs than we were this day last year. And so we're not drilling, Binky, as many wells as we were. And that is going to, at some point, come back to haunt us because we're not replenishing as quickly what we're producing. And then also you mentioned the fracking and the shale revolution that really ramped up here, and especially in Texas and Ohio back in 2012. That new technology that's now, I can't believe it's already over 10 years old, was really a game changer. And that really allowed us as Americans to really become energy independent. And I use quotations there because I could go into being, are we really energy independent? But I won't. But that really also lit a fire underneath the Middle East because they got worried because we started producing oil for a lot less and were able to make $1. And that's what happened in 2015 when they just basically flooded the market with oil and crashed the price back down to below $40 back in 2015-16. On the renewables front, I am definitely all about an energy addition, not transition. Right now, when you look at renewables here in America and globally, they take up less than 20% of the energy supplied. So we definitely need to get better about being able to supply that energy from wind, solar, geothermal, all these renewables. But also, more importantly, in order to do that, Vinky, we're going to have to get the infrastructure in America set up to do that. And what I mean by that is the infrastructure in America is built to create electricity from oil, natural gas, and coal. Those have been and nuclear. Those have been the primary sources to create electricity for 100 years. And also, we got to keep in mind, it's taken us 100 years to build out that infrastructure. So to have really renewables like wind and solar make a real dent, we got to build out the infrastructure and also make it a lot less money. One other thing to touch on, you were talking about the deep water drilling and the drilling here. Yes, as technology only continues to get more efficient, all these deeper oil plays that we thought were tier 2 or tier 3, and what that means is not as good of oil production as tier 1. These tier 2 and tier 3 levels will only become better options and more feasible to extract those hydrocarbons because of the technology as they get better.
So would any of these technologies or the infrastructure that's going to be put into place or already in place is using any form of oil and gas? Because there's going to be some consumption as well, right? Or no?
As far as any direct infrastructure right now, I know that a lot of the infrastructure that we are building has to do a lot with natural gas.
Mhm.
And also they are working on ways to get to store the energy from solar and wind. And that's that's a trillion with a T dollar question on how are we going to store this energy from wind and solar so that it is able to use it during a backup time. For an example, as the day we record here in North Texas, we had some horrific storms. So that means wind and solar were probably not our primary source of energy, and it was
Mhm.
probably more likely nuclear and natural gas. So as we move forward over the next 10 years, we'll definitely see infrastructure build more strongly for natural gas.
Ray, do you see that oil and gas being replaced by all the renewable energy at some point? Because earlier you mentioned you believe in energy addition, not transition. So I assume we won't be transitioning 100% to the solar or the other natural resources out there beside oil and gas.
I like the word addition, not transition. I think that over the long term, that no, we will not get rid of oil and gas because we still got to make paints. We still need to make cell phones. We got to make the tires for the vehicles. So I don't think subtraction is going to be ever good for the world and for our development. You look at the way that we've developed in America and Europe and the way China is developing right now, they're doing it with coal, oil, and natural gas. But do I see us using electricity from solar and wind in the future? Absolutely.
So what are some of the main factors that driving the demand in the oil industry in today's state?
Right now, it's still obviously transportation and technology.
Mhm.
Again, right now with we and also developing countries. As I mentioned, China is a developing country, and so is India. They are just now to where we were really in the 1950s. And so they're now building out their middle classes. They're now getting to a place to where the middle class can afford a vehicle. And they're also spreading out. You look at America and how we've spread out, and you got to now maybe drive 15 or 20 minutes to work every day. Those countries are also doing that. And then when you look at companies like Total and Shell and their long term, they're also looking at China as one of the big demands moving forward. And then, of course, let's not forget that right now, we're still using, gasoline and diesel for the majority of vehicles out on the roads in developed countries and the developing. So, right now, that's really where we're seeing the demand for the oil and gas industry.
Interesting. So how did you get started in oil and gas? Can you tell us
Uh,
that?
Yes, no, thank you for asking. I got started actually by an unofficial accident. My father was a computer nerd by trade, and if he was standing right here right now, I would be saying the same words. He was a software engineer for over 30 years. He
Mhm.
wrote custom software, and he ended up writing custom software for an oil and gas company, but he wrote it for their accounting department,
Mhm.
Vinky. And so as the years went on, in a nutshell, oil and gas crashed in the mid 80s. He
Mhm.
thought that the oil and gas companies wouldn't pay him anymore. They paid him like clockwork every month. And it was like all he kept hearing was oil and gas is dead, but this family oil and gas company continued to pay him. So he, long story short, began to invest in oil and gas from a non-operating side. I graduated with an undergraduate degree, as you mentioned, from North Texas in organizational development and behavior. So I had no plan to go into oil and gas.
Mhm.
However, at one point, Dad basically opened up the books and said, "Hey, here's how much we're making on oil and gas. This is what we can use to develop, and this is what we can use to start a company." And that
Mhm.
was back in 2011, and we haven't looked back since. So since 2011, Vinky, I've been out on the oil field working out on rigs, getting the school of hard knocks. I've had a chance to work for great drilling companies and completions companies. And then in 2015, by the time the real big boom here in North Texas with the Barnett Shale took off, I was able to start really working more hands on with our assets. And by 2019, we were able to then not only manage our own assets, but manage other individuals' assets and build our company from there.
So when you say assets, I assume you're referring to the oil wells?
Yes, that's correct. What we do is we purchase oil and gas leases, and we basically produce oil and gas from those leases. Some of the leases are brand new and they have no wells on them at all. So we'll drill brand new wells. I'll call it wildcatting for all your listeners out there, but there's really not as much wildcatting today as there was. But then also we buy producing assets with room for growth. So I know this is a real estate show, so I'll do an example like this. We'll buy old oil wells that maybe need some love, and we'll go rework them and add additional barrels a day. They might be doing 5 or 10 barrels a day, and then by the time we're done reworking them, they might be doing 20 or 30 a day. No different than when you buy an old house and you just you refix it up and then you put it back on the market to rent it out. Then you've got that monthly cash flow. And then when we drill new wells, no different than when you're building a house and trying to, then rent that one out. You hope you hit a home run that you can really rent it out for a great price. And, we always like to try to get our money back in anywhere between 12 to 18 months on any of our investments.
Interesting. So let's talk about the investment opportunities in oil and gas. With your experience, you started early on, you learned from your dad, and then you already have some assets in place, the wells in place, producing wells or brand new wells, whatever way you wanted to categorize us. So if you can give us kind of synopsis, kind of tell us, exactly from your experience, how to invest, what exactly happened when you took over your dad's business.
Mm-hmm.
And when you tell somebody, like if you tell me, Vinki, buy a well, so I won't have any clue, like what it entails buying a well, or what it's going to be producing, what's my returns going to look like. You already mentioned that 12 to 18 months you're going to start seeing some returns back to you, but how does all happen? If you can walk us through one case study, maybe from your experience.
Certainly. When anybody's trying to invest for the first time, I always recommend to define a company, an operating company that's got skin in the game first and foremost. Mm-hmm. And what I mean by skin in the game is that they are investing right alongside you. And that's what we've done since the beginning. And in fact, when we started really taking on our own leases in 2017, before we were operating them, we had to make sure that we had 50% or more. Okay. And then that means also that we had a lot more decision say. But when somebody's looking at investing, one thing I've noticed is you get a lot of operators out there that are saying, hey, we're going to sell 80% and we're going to keep 20. Well, why are you selling 80% and you're going to keep 20 and still run the show? I'm sorry. In any investment, that doesn't normally work that way, to where I'm going to give you all the money and then for the investment and then have you run it. So usually when we do oil and gas investments, we like to own the majority of it. Also because, hey, we want to tell people that we believe in this asset that we are investing in. Because, Vinki, at the end of the day, when you're investing in oil and gas, you're putting money in the dirt, literally. Okay. As far as drilling ventures go. Another thing that I do recommend people to do is look at their track record. And any company that says that they've never drilled a dry hole, definitely want to raise an eyebrow. I mean, as great as we are and as much science goes into drilling an oil and gas well, Vinki, you do come up with a dry hole every now and then. And sometimes a dry hole doesn't mean literally nothing comes out of the ground. It might also mean that just nothing but a water comes out of the ground. It's all salt water that then you put back in and you take it that way. But really, I also recommend people to start out small. That's one thing that my dad always says was, hey, I didn't start out investing in oil and gas with big checks. Start out with something that you are able to invest in comfortably, and also that you may lose, because, it is an investment like any other type. The best benefit to investing in oil and gas, though, as far as losing goes, is that the worst case scenario is that you would get an active tax deduction against your capital gains and or your annual income. When we slowly started to do the transition from my father to me, he's still out there every day, and He loves it. In fact, a funny story, a couple of months back, but one of our pumpers called me up and out there in the field, since me and my dad had the same name, they call me RT. And he goes, RT. And I said, yeah, Jeremy. He goes, do you know what your dad's doing? I said, no, Jeremy, he's out there with you. He goes, he is standing on a 48-inch pipe wrench trying to loosen a valve. And I'm all, Jeremy, get over there and help my dad. My dad was 70 at the time, keep in mind. And it's like, get over there. And, so you want to find a group that's hands on, that's out there while the work's going on, that actually knows a thing or two about the industry. Like I mentioned in the beginning, I didn't get my undergrad in oil and gas. I don't have a petroleum engineering degree. So the moment we started this company, I started getting out there. I was working on the drilling rigs. We're understanding the geology, learning the geology and how to read it. Because if we're going to do this and do it right, you've got to learn. And that's also something else I want to invite people to do is that when you invest with an oil and gas company, invest with a group that wants to share with you. Because I'm sorry, but sharing is caring. And that shows that not only that they believe in what they're doing, but they're going to teach you things and not be afraid to teach you. It's so different than when you bring on employees, right? You want them to be the best that they can be. Well, teach them everything you know, because that's only going to help you be stronger in the long run.
That's true. Because as an investor, and especially the first time investor, won't have much knowledge and won't even have the right questions like what to ask while you're looking to invest in oil and gas. And then earlier you mentioned start small. So how small you can start investing in oil and gas, and how does that work? Do you guys have a syndication model that you're allowing other people to invest alongside you? How does that whole structure work?
Great question. What we do is, like, for an example, we actually have a fund right now, and it's not a fund, I'm sorry, it's an investment, and these are private placement investments. Because what you would be doing is you'd actually be physically purchasing the working interest as a non-op working interest partner in our deals. And so, for an example, right now we're only selling 30%, and we own the other 70, and we're investing the other 70%. And so our investment sizes range. We've got people from anywhere between usually 50,000 all the way up until the millions. It just depends on the size of the investor. Usually we do try to do a minimum of 100,000. But again, like I said earlier, not everybody started out at that amount. And so we don't expect people to. And we do our best to really try to relate to people, kind of like earlier when I was trying to use real estate as an example, because all investments are the same. And what I mean by that is, what am I investing in and when do I get my money back and how long do I continue to receive? That's an investment as far as I'm concerned. So a lot of people that are in real estate really enjoy oil and gas as an addition to their portfolio. I just have to be sure to share it with them in a way that they can understand and relate.
So when an investor comes in and like to invest with you guys, how does the process work? Is it like a timeline that the investment is going to be like, for example, in real estate is 3 to 5 years. Those are the kind of deals that I bring it to my investors. So is there any timeline for the oil and gas investment? Like you're going to be out 5 years down the road or 10 years down the road, or is kind of you're just going to keep on getting perpetual returns forever? What does that look like?
Great question. For an example, the project we have right now, it is already an existing production cash flow. It is low production right now. So our investors, we should be, I think, about another 6 weeks from today of shooting, and we're going to close this project out because we're actually going to start drilling in about 3 weeks. And so as we do the drilling of the wells, that's going to kind of change the outlook and the trajectory of our investment to of the investment returns. But what we've done is we've really kind of curved back and gotten very conservative with our returns for our investors. And we like to tell them, hey, we're looking at it anywhere between an annualized return over the first 5 years of about 20%. And then over the next 10 years, another probably average of 10 to 15%, and then another 10 years of maybe another 5 to 10%. In any oil and gas deal that we do, it is a long-term investment. We do invite people to be a part of it for the duration of the production. So the average oil and gas well lasts anywhere between 20 to 30 years.
Mhm.
So they're looking at cash flow, monthly cash flow, over the next 20 to 30 years. We've got some investors that have been more family and friends over the last few years, so they've already been in it for over 5 years. However, we also don't do any back in after payout costs or returns. Like once you get your initial investment back, you continue to receive your investment on a monthly basis. So I did mention that, hey, on any drilling projects earlier, that we try to get our money back conservatively between 12 to 18 months. And what I mean by that, Vinky, is again, we're investing our dollars in these projects. And when we first started doing this, you know, it wasn't overnight success. So it was like, okay, how quickly can we get our money back to go do it again? So we average about 15 months on a return on leases on these oil and gas drilling assets that we get our money back and we go do it again. So usually that is usually our return structure. However, we just kind of have built them out to be more conservative because again, in the real estate game, usually higher returns usually kind of shy people away. But so that is something that we do. I mentioned that it's monthly revenue, so it is cash flow monthly checks that go out to our investors. Our first fund that we launched last year has already grossed back to our investors 40% in about a 12-month period. And it's netted return to them already 30%. And that again doesn't include the tax deductions that they got on top of that for 2023.
So when you say 12 to 18 months, so basically their original investment, the initial investment, they recover that or they get it back within 12 to 18 months, right? So once the initial investment is out, after that, it's just like a cash flow perpetual for next 20, 30 years?
Yes, ma'am, that is correct.
Okay.
Yes.
Okay.
And the oil and gas is long term. They work 24/7.
Okay, perfect. So next question I wanted to ask you, when somebody's investing with you, so you mentioned you are drilling the well. So when do you raise this capital? Like when you're ready to drill? Is that the time frame that you have, like 6 weeks, 8 weeks? Okay, you're gonna go drill the new wells now, so you should raise capital because you need some funds there for this process or the activities that's gonna happen with the drilling, right?
Right. What we've done is we've kind of done about a 3-month period because any of the projects that we do, we're old school. The drilling company that we use, we still hand write them a check as the drilling rig moves off location. So we don't do any investments in any drilling unless we have the funds to do it. That being said, what we've learned is that let's kind of get a time period of 3-4 months of bringing out this offering of 30% to other individuals. And then we usually try to cut it off about 2 to 3 weeks into the drilling of the new wells afterward. So usually it's about a 4-month period that we raise funds and then we go to work.
So sorry to cut you off, but I was going to ask you that. So this capital raise that you're doing for the newer wells, this is only for the new wells, right? For the new drilling and all the production from there, that's where they're going to get the returns from, right? And not from any of the existing wells out there. This is a new investment for the new production.
Yes, ma'am. This will be for the new production. And basically what we have is we have a combination of existing wells and new wells that we've packaged together. And we like to look at that as a form of a hedge. We know that there's oil behind pipe on the old wells. And we know that there's oil in the ground. But hey, if for whatever reason all the wells don't come online, which knock on wood has never happened, all the new drills, we know we've got oil over here, and vice versa. If we don't get any new production out of the old wells and we get nothing but new oil out of the new wells, then it's still a win. So that's kind of what we do. So yes, the current project is a combination of new drills and existing wells to protect, to hedge against the hedge, and also to add additional monthly cash flow immediately for our investors.
Yeah, I like that because in case it's a dry hole, like you were talking earlier, it could happen, right? There's no guarantees in anything. So you're not losing your whole investment if it's a dry hole versus a wet well. So, but if you are creating a portfolio of the existing already producing wells and the new wells, so there is like a little bit hedge over there because you won't be losing your complete investment. You're gonna be getting something back. Maybe not as rapidly. The time frame might change, right? Instead of
Right.
18 months, it could be 2 years, 3 years. Is that
Right.
correct statement?
Yes, ma'am, you are absolutely correct. And also, not only in this form, also you get to write off your investment because of the new drills and something called the intangible drilling cost. So
Mhm.
that's also a great thing for investors.
Yeah, so let's talk about the intangible drilling cost. That's the tax benefit right there. And this is a huge for the people who are looking for tax benefits. So talk to me or talk to us, tell us about what are the tax benefits with this kind of investment.
Yes, the tax benefits kind of basically go that anything $100,000 investment or more. In 2023, our investors were able to write off 83% of that.
Mhm.
And then they were also able to write off 15% of the income that they earned through the depletion cost as well, or depletion tax as well. So really, they were able to do almost 100% write off on their initial investment just because of the 83% that they were able to do, and then the 15% tax the depletion that they were able to use. And that's been something that really why my dad got into it back in the 80s was more for the tax deductions than it was for the cash flow. And sometimes individuals like that better because what they say, you got to spend it or you're going to lose it. So excuse me.
Sure.
So sorry. So might as well throw it into an investment that you might be able to then earn more off of and still get a tax deduction on that income that you receive every year.
So let me get this right. So you're getting the 80% or 83% from the previous example that you gave us. That about 80%, I would say you get that year one, right? The year that you're investing, and plus 15% on top on all the returns that you're getting.
Yes, ma'am, that is correct. And that is on year one on that 80%. But you can also spread it out like any other one. You can spread that out as well over a 7-year period.
So in the 7 year periods, are you getting any more deductions going forward? Because there's going to be returns, right? There's perpetual returns. Are you getting 10, 15% so you can offset those as well? If you're
That's
getting,
correct. Yes,
yeah.
ma'am. You would be receiving that. And of course, in my perfect world, our investors, that invest in January, they get their investment back at the end of the year, right? In a perfect world. And not only that, though, then hopefully they'd want to invest again. And, but yes, no, they would be able to write that off. It would be a one-time deal of writing the 80% off. However, that 15% would be long-term, lifetime of the investment.
Lifetime of the investment. That's good. So share with me, what are some of the risk or what are some of the red flags going into these kind of investments?
I think every oil and gas company definitely looks at red flags a little bit differently. We definitely like to at least drill in areas of success. So what I mean by that is, okay, even if we're going to go drill a brand new well on new leases with no existing production, Vinky, we want to make sure that we're in an area that had oil and gas. And what I mean by that is maybe there's a field just offsetting this new oil and gas leases. Also, I'll be sure to be working with companies that, again, have skin in the game.
Mhm.
I don't tell anybody how to manage their own money, but I definitely recommend people to go look at companies and ask them, well, how much of it do you own as far as your company goes? Because if they're not keeping a majority of it, what does that really say about the investment? How much do they believe in that investment? Another thing I do want to recommend is, and this is just me, is go find a family office like Pecos Country Operating and Trevino Resources. Why? Because you're getting direct working interest. It's not typically it's not a fund, so nobody can ever come in and outbuy you. Meaning, once that 30% that I'm selling is sold, it's done. I'm not going to add more and deplete my other investors' assets just because we brought on more individuals. So I definitely want to keep that in mind for people to be looking for working interest, non-op working interest. And also be looking at the reworks because there is some great money in reworking older wells. Again,
That's
as I
true.
mentioned, you might be able to invest in older oil wells that might be doing 5 barrels a day, 10 barrels a day, and then you might be able to bring those up to anywhere between 20 to 30 barrels of oil a day. And guess what? That's a big difference on your returns right there.
That's true. I think I'm going to have you back so we can dig a little bit deeper to understand that how the drilling works, how many wells, and what exactly are the parameters to figuring out which is a good investment, which is a not from the drilling perspective or from the leasing perspective, or even finding out the real estate as well, because there's multiple ways people are doing oil and gas. Because some are just in real estate because they're just leasing the real estate to other oil and gas people who are just drilling wells. So
Mhm.
wanting to understand all those so that we can have a little bit more insight and figure out how to oil and gas. But I'm going to ask you one question before you go. What is the long-term outlook for you? What do you see in your crystal ball?
My crystal ball is we're going to be our goal here at Pecos. I'll give you a little, on us. We're going to be scaling. We're looking to scale, and that's why we're looking to bring investors on over the next 5 years. Oil and gas, as we said, is not going away anytime soon. And based off of regulations, administrations, and the world outlook, the demand is only going to increase for the next 50 years. So we will see the price of oil only go up. A little piece of randomness. If you actually took the price of oil from about 1900 to about today, and you added inflation into it, okay, and you just kind of took it,
Mm-hmm.
oil has perfectly averaged $42, give or take, over a 100-year period.
Mm-hmm.
So it's a great investment that you are looking to grow, and it's not going away. And then one other quick thing I do want to mention for all your real estate individuals out there, you can 1031 exchange into not only oil and gas minerals, but oil and gas working interest as well, so that you don't have to pay those capital gains.
Yeah, we have to have you back because there's a lot more knowledge that needs to be shared on this portal because I think this was too less time. We are out of time. So can you share one golden nugget with my audience?
Oh my goodness. Love your families and hug everyone. And you never know, and be nice to everyone. You never know what kind of day anybody's having.
That's so true. Thank you so much. So this brings us to our rapid fire round. I'm going to ask you 5 questions. You're going to answer in one word or one sentence only. Are you ready?
Yes, ma'am.
What is one of the most important thing that you've learned in your life, and how did your life change after learning it?
Oh my gosh. I think one of those important things is you got to be upfront and honest with people. And if you do that, then the back end is always a lot easier.
That's true. I agree on that. Share one good book that you love and like to recommend to my audience.
Oh my gosh. Right now, the one that's on my mind is 1984. I recommend everybody to read the book 1984. Just a very, very great book.
Okay, I will look into that. Thank you so much. In one word, what does life mean to you?
Joy.
I like that. What is your biggest passion?
Oh my gosh. My son, I've got a 2-year-old son, and my passion is just to be an example for him. But then again, I'm excited that I get to take him fishing for the first time in a couple of weeks. So I would have to say my son, and I love spending time out in the outdoors. So I would say
How
that.
cute. I'm very cute. If you could turn back in time and talk to your younger self, what would you tell yourself and why?
That education is important, no matter if it's at college or a skilled trade, and focus on grades a lot earlier. I'm working on my MBA right now at TCU in energy, and the amount of time that I'm actually now focused on learning is so much different than when I was 20 years old. And I'm sure everybody can say that, but I would definitely say focus on education and never stop investing in yourself.
How can people reach out to you, Ray?
Yes, people can definitely reach out to me via, I'm on LinkedIn. We have a website called pecoscountry.com. Also, I have my own fun little podcast called The Crude Truth. You can reach out to me there on thecrudetruth.com. And then again, on LinkedIn at Rey Trevino III.
Good. I really enjoyed our conversation today, Ray. I look forward to having you back soon.
Vinki, thank you so much, and wish all nothing but a successful rest of 2024.
Thank you.